What is up, YouTube? Trade Mode James here. Today we're gonna go through some supply and demand, some back testing with supply and demand. So sit back and get your notepad or whatever. Pay attention. We're gonna go through some charts. So the first we're gonna start on is GBP USD. This is a FOREX chart. So this is the Great British Pound versus the US dollar. And I'm just at a random spot on the chart just to show you guys that I'm not just finding these spots and making the video look good. These are really how they work, all right? And we're gonna just start right here in the middle. Let's just get right into this. Actually, before I do that, make sure you guys hit the like button, the subscribe button. If you're not a subscriber, I would appreciate you doing that. And the notification bell to get notified when I drop a video or go live, all right? Let's get into this. All right, so right here, let's find a demand zone. So demand zone is an area where price has come down and leaves really quick. All right, so something like, let's find one here. Let's find one. So by the way, this is a 30-minute chart. And guys, you can do this. Like, you can scalp supply and demand zones. You can go down to the 3-minute, 5-minute chart and do this if you're feeling comfortable. Here's a decent one. So let's look at this. So let's zoom in real quick here. So price came down here, all right, formed this double bottom and shot up real quick. So when you're looking at this chart, you got to know what you're looking at. These big voluminous candles, these are not retail traders moving the chart like this, all right? Moving the candles like this. These are the banks. This is the smart money, all right? These are the hedge funds, the banks, the guys that have the real money, and they're the ones that are able to throw billions and sometimes even more than that to move these charts in their direction and in their favor. So when you see price come down, kind of trickle down, and then boom, just leave real quick, that is a demand zone, all right? And supply zone is gonna be the same thing, but on the opposite side. So like right here, where price kind of came up and then boom, it just dropped off real quick. That's gonna be a supply zone. So demand zones at the bottom, supply zones at the top, all right? So let's mark this zone here. All right, let's mark this zone. And you can already see how this plays out. If you guys have, the eye, then you'll see how this worked and how you could trade off these zones, right? We don't want to be following the retail trader. We want to follow where the banks are moving the money and where they're known to move the money. And the only way to know that, the only way to know where the banks are moving the money is by finding these supply and demand zones. So what happens here? This is a 30-minute time frame, all right? So this is October 20th, 2021. The next time it touched here was October 22nd. All right, so this is a 30-minute time frame. Each candle represents 30 minutes of time. So basically 2 days you would have had to wait before you could take this trade. All right, so look. So what we're doing is let's pretend all this isn't here, up in here. We know this is a demand zone because we've seen price just spike out. So we would draw this zone in and we would simply just sit here and wait, guys. We would just wait. All right, it takes patience, but you can make a lot of money with patience, all right? And so what I would do, and what I do, what I do is I wait for these zones to get hit again. Once that zone gets hit 2 or 3 times, sometimes even 1 time, I kind of just try to move on and find new ones because they're no longer wet or fresh, right? So let's look at this. So price came down, all right, and it left real quick. So trickled down, left real fast right there. So I marked my zone in, kind of something like this. And so next time price comes down to this zone, I'm ready. I'm ready to enter a trade because I know that the banks moved the charts in their favor from this zone not that long ago. All right, so that's what we do basically. It's just really that simple. I mean, you know, price comes down here, you get in a trade somewhere in this zone and you hold, and next thing you know, you're way up here in profits. And this would have been about what? So let's just say you got in on the wick here on this next candle. So you got in at October 22nd, and then you took profits somewhere up here, I don't know, October 24th. So you could held this for 2 days, or you could have just scalped this and got in right here on this 22nd and took it up on the same day and got out up here. You made some money there. So that's a good example of a demand zone right here. So like I said, price came down, left real quick, mark the zone, wait for price to come back down to the zone, enter a trade, and then, exit whenever you feel comfortable. If you want to hold this, for a swing trade for a few days, you make a lot of money here. You want to scalp it, you still make some decent money. And always want to be setting on Forex at least some stop loss. And you're going to be doing that at structure. That's another video. But always want to set your stop loss at structure. So right here, it would have been somewhere around this area right here, which pretty much if you did set it right here, you might have got stopped out. All right, that's why there needs to be some variance in your stop loss, maybe a little bit lower than structure, but like I said, that's another video. So this was a nice demand zone and we could have made money right here. Let's go on to another one. Let's see if I can find another, let's find another one. Here's another good example of a scalp, little 30-minute scalp. All right, now, mind you, there are different kinds of supply and demand zones, the ones that are in the middle of moves and the ones that create big moves, right? So I'm gonna see if I can find another good example here for you guys. Let's see. And they're all through here. I mean, just right here. There's a supply zone right here. So after this big dip down, this is another supply zone right here, and this is a one that's, you know, in the middle, but this is kind of further advanced stuff. All right, but we're gonna go ahead and we're just gonna mark this up for, we're at the end of the chart here. I'm trying to find a really good one to show you guys. Excuse me. Let's find a good one. We already did that one. All right, let's do this one. So here's another demand zone right here. All right, price trickle down. All right, you see price kind of trickle down and then boom, just leave real quick. All right, we would be marking this up live on the chart. We'd say, okay, boom, we got a demand zone. Next time it comes to my zone, I'm gonna get in a trade. All right, next time it comes in. So this got it. This left this zone October 8th, 2021, and next time it came down here was October 11th. This was 3 days of time. All right, and you know you got to mark these charts up and just be waiting for them. Get up in the mornings, whatever time you trade, check your zones. So as price starts making its way down here, we're ready. We get this big drop off here on this candle. We get a double bottom right in this zone. We could enter a trade right here and ride this all the way up here. So you're riding this, you know, quite a few pips. How many pips is this? We take 11 pips right there. 11 pips, just real quick. And how did I do that? I found my supply and demand zone. This is a demand zone, it's on the bottom. And I waited for price to come down into it. I saw the double top forming. I would get in and I'd scalp it up, you know, 10 or 11 pips and call it a day. Next time price came back down, you could just do this over and over and over. That's one hit, that's two hit, that's three hits. This third hit took us up pretty high. So this one actually ran, you know, if you held through this, it actually ran 57 pips. That's quite a bit. All right, so that's another example of a demand zone here. And this is just what I do on a daily basis, guys. This is how I'm making money in these markets. All right, but you got to find the good ones. And like I said, I recommend everybody, sorry, my voice is kind of gone. I keep coughing in the mic. My apologies. But I recommend you guys start doing this on the higher time frames, all right? Because the lower time frames, there can be a lot of variance, and it's just sometimes it can be a little bit tricky to find the good zones. It really can, all right? It can. So like I said, right here, this is an advanced supply zone, all right? I would call that. All right, and there was actually some variance in here, so you would have actually gone into some drawdown on this trade. But, you know, this is a supply zone. So price came down, it came back up, and boom, from here it just left real quick. All right, I would have marked that on my chart. So when price comes back up to this zone, you're ready for a trade to take a sell here and make some money, and you did. Look at this candle here, this big long upside down doji candle here. Price came up here, you would have entered a trade in this zone, and price would have got pushed down, and you would have made how many pips on this? Let's just say you got in the middle, you make 17 pips. You know, you're using a good lot size, you're gonna make some money there. So that's another good example of a supply zone right there and how to trade off of it. We would have made some money there. We would have made some good money there, actually. Let's find another one here for us. Let's see. We can get a good one. Let's go up to a higher time frame so you guys can see a little bit better how this works. Let's go to a daily time frame. Now, matter of fact, let's go to a 4 hour. We'll go to a 4 hour time frame here. All right, these are much easier to see, all right? So boom. Perfect example, supply zone, all right? Price came up, kind of consolidated, and then just dropped real quick. You gotta know what you're looking at, all right? You gotta understand supply and demand and what you're actually looking at. What you are seeing are orders being filled so fast from the banks. All right, that's what you're seeing here. You're seeing orders being filled so fast from the banks that it violently moves the price, leaving the remaining orders still up here to be filled. They layer their orders, right? So when you see price jump down like this, you know that there's still orders up here. All right, and that's pretty much the basics of supply and demand. All right, it works the same in the stock market. All right, so the banks fill their orders, some of their orders, and the price violently jumps down or drops down. And so we know that there's probably likely still some orders there because of how fast price moved. So we'll be ready for a trade next time price gets up here. And price did inevitably come back up to this zone, all right? And you could have took a trade right here. You would have went into a little bit of drawdown here, but you would have got back in the green pretty quick, and you would have made, let's see here on this trade, if you enter right in the middle at this double top, you get some drawdown, but you inevitably here make about, 55 pips, guys. I mean, and you could take profit whenever you want. You could have took this profit on the bottom of the candle here at 27 pips. If you're trading a good lot size, all you really need is 10 to 15 pips, and you're really making a lot of money. All right, but if you got the balls to hold through all this stuff, I mean, you score 120 pips here. All right. So, and that's just finding the areas where the banks are moving the money and waiting for price to get back up to that same area to fill the remaining orders that did not get filled over here. All right. So price moves down real quick, trickles back up. You enter a trade, you make money with the remaining orders that need to be filled. That's supply and demand, just straight up. It's just that simple. Now, I know it looks simple on a chart where I can see the future, but if you see zones like this, guys, mark them up. Mark those zones up and really dig deep into the supply and demand theory because, well, really, it's not a theory. It works. I've been doing this for years. I've been doing this for years and years and years. So, and let's see if we can find another example here. Excuse me again. Here's another good one. All right. You had to wait quite a bit of time here. April 30th to June 20th. All right. That's a long time. But if you have these zones marked up, price finally does get back down there. You have the zone marked up. All right. You just do. So we see price just jump up here. We know that's the banks. And so next time price gets down here, you set an alert here. It might take a month if you're trading on a 4-hour chart. Might take 2 months. Who knows? But when price does get down here, it's very, very likely that it's going to jump again. And that's exactly what happened here. Price comes down. If you enter a trade, easily score 50 pips on this. Way more if you hold 150 pips, 142 pips. I recommend, people that are just starting out, take your 20 pips. Take your 20 pips and rinse and repeat. 20 pips adds up, my friends. It adds up, I promise you. That's how I started. Take 10 or 20 pips and just call it a day. Move on to the next trade, right? So that's another good example right here of a demand zone. And like I said, there's no difference in supply and demand on the charts other than one's on top and one's on bottom, right? One's a buy, one's a sell. Here's another one you have to wait that long on. This one got hit a few times. This one got hit a few times up here. Price comes up, leaves real quick. And this one been kind of a hard one to mark because it didn't really fall down like I'd like to see it happen. I like those violent moves, the very quick falling moves on these supply zones. But this is a supply zone. And this happened, this started coming down here about, May 18th. Next time it touched up here was about May 21st. So 3 days. You had to wait 3 days to get this zone hit. But let's just say you entered in the middle of the zone. You would have went into a little bit of drawdown. Let's just say you got in the middle. You go into about a 21 pip drawdown, but you end up making 70 pips if you hold. That's easy money right there. Easy money. That's another good example of a supply zone. Let's just see if we can find another one here for us. Let's drop down to like a 5 minute so we can show you that you can do this on a 5-minute time frame too. There's no difference. A little bit more variance, a little bit more risky to do it on these lower time frames, but if you don't want to wait 3 or 4 days like me, drop down to a 15-minute time frame. This is the one I like to do it on. And you can just sit here and do this nonstop all day long. I mean, it's just sometimes you got to wait, sometimes you don't. But it does work. It does work. All right, here's another little good one. This one didn't really come that close, but it did over here. All right, so we got, I like to call them blips in the matrix. All right, price is tanking down. It has like a 38% pullback here and creates this double top and then just falls. So I'm marking this zone, basically wick to body. All right, and this one didn't quite touch, so you probably would have missed this one. I would have missed this one because I don't like taking them like this, but a lot of people do take them early. Just so you know, that is a strategy because you don't want to miss a big move like this. So some people do take this early and they account for the drawdown. So just say you take this early, and you get in early and you go into, a 10 or 15 pip drawdown, you got to make sure your account can handle that drawdown. And if it does draw down, you inevitably would have came back down and made, 50, 60 pips here with the ease, with easiness. But the next time price actually did touch was over here on November 14th. So November 10th, it took 4 days for it to get over here, 4 days. But when price did come up to this supply zone here, what happened? Small drawdown if you got in the middle of the zone, 2 pip, 1 pip drawdown, and then boom, you make your pips here. Easy. Make a good 10 or 15 pips real quick. All right, and like I said, if you're trading on a decent lot size with some good leverage, LQDFX gives, some good leverage. You can definitely make some money on these scalps. And this is just an example, but you got to know what you're looking at. I'm going to go over this again. Price is leaving. Why is price leaving? Why is price leaving so quick? That's because the banks are having orders filled very fast. All right. And it leaves remaining orders there. to be filled. So next time price gets up to the zone, it has to fill the remaining orders that were left over, and that is what causes price to go back down when it hits that zone. It's just that simple. Excuse me again, my voice is, I've been doing videos for 3 days straight. I apologize, and I don't think I've ever made a video this long, so I'm trying to talk and do all this, just making sure you guys get the basics of supply and demand, because that essentially is what this is. That is what this is. These are supply and demand zones. When we talk about supply and demand, that's what these zones are. They are supply and demand zones. Here's another little good one. Price comes up. Let me zoom in real quick. Oop. All right, we got a nice, perfect example here, actually. Price comes up and leaves real quick. All right, I'm marking the zone. Wick to body, pull it all the way to the right. Now, we can see this now because it already happened, but in the moment, we don't know that it's going to touch up here again. So we mark our zone, we wait. Price is coming up. It starts reversing, coming up. Boom, you get a touch point right here. You get you can eat off this zone a few times here. All right, price came up here, you get in a trade. Boom, supply zone, orders being filled, get in, score 30 pips. 30 pips, 29, 30 pips right there. Price comes back up. You can just keep doing this over and over and over. This one didn't come down much, but you still got 12 pips. All right, and you could, like I said, once it hits once, twice, 3 times, I'm just not going to mess with the zone anymore because it's no longer fresh in my opinion, all right? But that was a good example of a supply zone. Here's another little good one, a little quick one. It's quick scalp here. Wick to body. Price trickled up, came down real quick. Next time price came up to the zone, I'm in for a trade. And boom, you're scoring what? 37, 40 pips here? 34 pips here? I mean, you could take profit all the way down if you want. Or you could just take it here at 19 pips, 20 pips, and call it a day. That's a nice little zone right there. And I guarantee you, if I pull this to the right, you're probably going to see price fall out of that area again. Same here to the left, actually. This thing just got hit over and over and over. I mean, you could just eat off these zones left and right, guys, left and right. And I want you guys to get used to drawing these zones in. Like, go to the higher time frames, go to the daily time frame, all right? You can see these supply and demand zones much, much, much better. All right, there's a lot more time you got to wait, but they're easier to identify, all right? Much easier to identify here. That wick is too high. We'll use the wick like this. All right, pull it. What happens next time price comes in this zone? It falls off. So you're waiting, yes, you're having to wait here. This was a long time, December 17th all the way to September 2nd. That was a couple months. That was a few months, right? That was a long time, but it still gives you an idea of how this works because it works on the higher time frames as well. And if you're swing trading these supply and demand zones, well, then you might be holding a position for a day, a week, a month, a year. Who knows how long you're trying to hold this, but it did do what it was supposed to do. We know the banks move the market here. We drew the zone in. We wait. September comes along. You get in a trade, you swing trade this thing down to the bottom side. It's that simple. You score like a couple hundred pips here. 600 pips on this move. 600 pips. Do you know how much money that is if you're trading on leverage? That is a lot of pips. You're using a $10 lot size or something like that, or something even larger maybe, $50 lot size. You are absolutely smashing this trade. You waited 3 months to make 20 or 30 grand. Like, that's really how it works. If you're trading high lots and you're waiting for these zones to get hit. Yeah, it took a while for it to get here. Months and months and months, and I would never make this trade, but this is just a good example to show you guys how these supply and demand zones work, right? This is a good supply zone. Price came up, fell off real quick, mark my zone. Next time price came over here, enter a trade, take profits down here, wherever you're trying to take profits, all right? That's a good example, but I highly recommend you guys do this on the higher time frames at first so you can get an idea of how this works. Here's another good one. Just random supply zone here, all right? And you see what happened next time price came over here. We scored some pips here, all right? We scored some pips here. Price came over here, came up, you were in some drawdown. Let's just say you entered in the middle, so you went into about 52 pip drawdown, but you ended up making 130 pips. So you're risking, 50 pips to make 130 pips. That's 2.5 to 1, almost 3 to 1. That's pretty good. All right, so like I said, I'm just trying to give you guys good, quick examples of how these supply and demand zones work. These are very vague ones, and there's much better ways to trade off them if you find the really tight, fresh zones, all right? But this is just for backtesting purposes to show you guys how these work. And guys, this works in the stock market too. Let me just go to let's go to Tesla, All right, let's go to Tesla and see if we can find some supply and demand zones. All right, let's go to like a 1 hour time frame. Right here. Price came down, left real quick. That's the banks. That's not retail traders, all right? Anyways, we draw our zone in and we wait. All right, this is a 1 hour time frame. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 23, 24. So basically this is about 2 days of time, all right, guys, 2 days of time. Each candle represents 1 hour, all right? So September 13th to September 20th. Actually, it was more than that. Oh, it's been a long day. Oh my God. All right, anyways, let's get back to this. So this is a nice demand zone here, all right? Price left real quick. We marked our zone and we waited for price to come down to the zone. We had a nice gap down here. So we've realized it's probably coming to our zone and we got a nice test here right on the top. So once I start seeing that, right, and really I need to get it to the base right there. So if I zoom in here, you guys will see what happened. Price came down to my zone. Once you get this doji candle, you already know. You can enter a little late here. You can enter right here. I like to enter right at the top just in case it does something like this. If it comes down to my zone, I might have a little bit of drawdown here, but it's not a big deal if I'm using proper risk management, all right? But if you get in at the, right here, or even right here at this doji candle, you see what you make here. Price went back up. So the banks get their orders filled, right? The banks get their orders filled. All right, price goes up. That's my money sign. And now there's remaining orders here waiting to be filled for when price comes back down. So the remaining orders can be filled and, move the price back to the upside. And this is the basics of supply and demand. There's a lot more that goes into this, but this is how you find these zones. I highly recommend you guys go to your charts and just draw these zones and find these supply and demand zones because they work. All right, this is another great example right here of a supply zone. And this one was quick. This one was quick. How do I know where the banks are moving the money? I see the price move very quickly. I know banks are moving the money like this. All right. So, like I said, we see the zone, price comes down. It actually came back up right here, but we wouldn't have known this was a supply zone yet. We wouldn't really have known till this played out, somewhere down here. So we're waiting here. We get our touch point here on this wick. We get in. Boom, you make your money on the downside. It's just that simple, guys. Supply and demand is the key to everything. You want to be a good trader. You want to make money day trading. You want to be a scalper or even a swing trader. You got to know supply and demand and how these zones work. And more importantly, why they're working. Why they're working, because you got to know orders are getting filled up here. That's what's happening on these candles. These candles represent orders being filled. That is what you're seeing on the chart. This candlestick represents a volume of orders that are being filled. All right. So, and like I said, that is exactly what is happening before your eyes. So if you know that the banks are getting their orders filled in layers, there's got to be some left over. You get a touch point here. You get a chance to eat right here on this touch of the zone. You get a chance to eat on this touch of the zone. That's 2 touch points. You get 3, and you even get 4. All right. So you get, 3 or 4 times. I would recommend not touching it after 3 times, but you see how many times you could eat off this zone, just knowing where the banks are moving the money. It's a good example of a supply zone right there. See if we can find another one. Here's another one. All right, here's another one, just right here, just right before your eyes. How do I know? Well, look at the price action. Price action is king in my world. Wick to base, all right? And we zoom in a little bit and you will see here, all right? We got some violent movement to the downside. Price is coming up with momentum, and then boom, it stops and it almost looks like it halts and then bow, just falls off real quick. That is a demand or supply zone, all right? Supply on top, demand on bottom. We draw our zone and we wait, consolidation here. Price spikes up pretty close to our zone, and you could have ate off this one. It would have, this just comes from experience, but you could have ate on this one. That was pretty close, but the next one really that touched was right here. So if you enter right in the middle of the zone, you come into some drawdown here, not a big deal, and you inevitably make a lot of money because price gets pushed back down pretty far. So it would go from 696 all the way down to 673. That's a pretty big swing. And if you're on margin or whatever, and even if you're not on margin, you still can make money on these trades, on these supply and demand zones, guys. All right, you just can. It's looking really, really good when you get zones like this that just are respected, right? It feels nice. It feels nice. And you can just find these all day long in the Forex markets and in the stock markets, guys. And I highly recommend you guys just go back and find these zones. Look for areas just like this. A prime example. All right, where price came up, it left real quick. Mark this zone in because the next time price comes up to that zone, it's got a high probability that it's going to respect that zone and reverse off of that zone. It just is. All right, start on the higher time frames, recognize these zones, how to find them on the daily. I wouldn't say trade off these because it just takes a long time to wait, but you can find these over and over and over in the stock market and in the Forex markets. All right, guys. I just wanted to do a quick video to show you guys how I find these supply and demand zones. I'm new to making kind of like tutorial videos and how I trade, and I'm trying to get better at it. So if you guys think I'm doing a good job, make sure you guys hit that like button, hit that subscribe button, and then hit the notification bell to get notified when I go live, all right? Go back on your charts, find these zones where price comes down and leaves real quick or goes up and leaves real quick. Remember, supply zones are at the top, demand zones are at the bottom. Guys, if you like this video, drop me a comment, let me know how I'm doing. I appreciate y'all very, very, very much. And like I said, supply and demand is the key to being a good trader. I promise you, all right? Peace and love from my end, guys. TradeModeJames, signing up.